What do you got here for us?
It always does. It always does. So look, I mean, it's really important. It's really important to go over what happened yesterday. Okay, this is probably one of the most anticipated Fed meetings in a long, long time, right? For one particular reason is because look, the Fed meetings are based on the economic data that comes out, CPI, PPI. I always joke and say DUI and DWI, but those aren't part of the economic data. But all that being said, we've obviously, with the government shutdown for more than 4 weeks, we have not been able to get that information. And apparently the Fed is not either. And I find that bizarre. In the world of 2025 with AI and all that stuff, the fact that we can't get economic data somehow or some way seems a little bit crazy. But it's, for those who don't understand that, it's really based on surveys, right? A lot of these numbers are based on surveys. And so they've had to sort of, they were able to sort of meander their way through it and go to like the what's it called? What's the name of the agency that pays us? ACI, not ACI, whatever it is that does payroll. They were able to find out some of the economic data they could. We ended up getting CPI last Friday, so we had a little bit of economic data, and obviously the Fed has access to whatever they need. So anyway, all that being said, the Fed, in fact, has been sort of trading in the dark too. So anyway, he comes on stage yesterday at 2. He announces a 25 basis point. What's significant about yesterday's meeting was there were 2 dissenting governors. 2 of the governors, right? There are 12 governors plus the Federal Reserve Chairman. 2, and they all weigh in on what they think is supposed to happen. 2 of the governors dissented and felt that that the economy deserved a 50 basis point cut. That has not happened, right? The last time we had a dissent was back in August. Last time inside a Federal Reserve organization. So he came on, he cut it 25 basis points. The market did not react much at all because it was very expected. You could almost say that line, it was priced into the market, right? But then at about 2:30, when he goes on, that's why we always say, David and I, we love trading these days because they're so crazy volatile. And we always say, guys and girls, listen, do not have orders out there at 2 o'clock because the moves are going to be radical on the upside and the downside. And then when he comes on at 2:30 and he has his news conference, that's when he gets into the nitty gritty. Well, sure enough, yesterday was no different than any other time because that's when we saw the market absolutely drop down like a rock. We went down 70 handles on the S&P. Yep. And why did that happen? Why did that happen? Because he said that the December interest rate cut is not locked in the books. Everybody has been anticipating 2 more cuts, right? Yesterday's cut and 1 in December, giving us a total of 0.75 cuts in 2025. But what he said, first of all, was that there were 2 dissenting people with 50. There was one guy who, in fact, thought that they shouldn't cut it at all. And when there's dissent amongst the rank, it completely screws everybody up. And then he said, which blew everybody's mind, was what caused the market to completely sink, was that he said, whatever economic data is coming in, even though it's sparse, we believe that there's a possibility that we may not even cut more in December. Well, that threw everybody into a flux because everyone had positioned themselves, the funds, everybody, the way they work with bonds and treasuries and the dollar and all that stuff. Everybody was positioned for at least 2 cuts, 1 yesterday and 1 more in December. There was no impression at any time were we not going to get another one in December. How much it was going to be, we didn't know. But when he said that it is not locked in the books, I think the term he used was, it was not etched in stone that we are going to have another one after yesterday, then the market did not like that at all. And the market tells you what it thinks of all this economic stuff, right? And it's very clear. They do not hold back on their opinion, and they sold the market hard. And then for the rest of the afternoon, we were in this complete wild roller coaster. It looked like a friggin' heart attack, an EKG and a heart attack, right? It was up and down and up and down. My son and I traded it. A couple times it worked. A couple times, we were exactly on the wrong side of the trade. But it's just, for every word that Jay Powell said in his news conference, the investment community hangs on to each word. And when he talked about the fact that the jobs market was softening, they did not like that. And then, they actually liked that because that put more pressure on him to cut interest rates. Everybody needs to understand that this is an example of where bad news is good news, right? The softer and the worse the economy is, the greater chances of more interest rate cuts there is. Now, he did say that, look, what would everybody think? What is the sector in our economy that is most impacted and sensitive to interest rates? It's housing. Okay, housing is completely frozen. And so if we don't cut interest rates again in December, look, higher interest rates for longer is affecting everything about housing starts, remortgaging your house, all that kind of stuff. The real estate market and the housing market and new housing starts and rebuilding and all that is completely frozen. So all of the stuff he set the stage for was really disappointing. But the market was hanging on to every word he said. He said jobs were soft. He said that our economy is out. He also said that they are going to stop quantitative easing in December. Now, everybody needs to understand this is heavy duty economics. I had to really study it to try and understand it. But you realize that the Federal Reserve has a balance sheet, right? We print money, then we have deficits and all that kind of stuff. And then they sell treasuries and bonds and they buy them and China comes in. It's a complicated affair. But when they said we're not going to have any more quantitative easing, that means that they're going to no longer be unwinding this massive position that the Fed has that goes into the trillions of dollars. So look, it's hard to unravel all of this stuff, but we're going to see what the market is going, how the market's going to respond today, because usually the next day is the follow through. Yesterday is usually a very emotional knee-jerk reaction. And then the day after is when people sort of really position themselves. So yesterday, that massive sell-off was totally based on the fact that he said that that a cut in December is not a surety. That was the word he used. He said a continuation of this interest rate cutting cycle in February is not a surety. And that's when if you look at the graph, you can put up the S&P from yesterday. You saw a massive spike down, and that was very aggressive, right? Anybody who was long into that got themselves guaranteed were blown up, right? That was a blow up experience for sure.
So let me stop you here. You've been doing this for a long time. What do you think's next?
Look, you know what? My gut is that there are a couple of things going on here. There's a posturing between him and Trump, right? He does not like to be told what to do, right? And Trump is putting heavy pressure for him to cut interest rates again. The Trump administration has already input one of their choices. So we know that Jay Powell's life expectancy at the Fed is very short term. He will probably be leaving that job in April, right? They've already installed one Fed chair. They've already installed one. Okay, they've already installed one new Fed governor who is a Trumper. I don't remember his name. Starts with an M. He's been
Stephen Mirren.
Thank you. He was the one who voted for a 50 basis point cut. So he's the megaphone for the Trump administration. Now, once they get a couple more guys in there and they get to pick who the Fed chairman is, this is going to be a whole nother smoke, ladies and gentlemen. It is going to be basically, they're going to knock down the interest rates aggressively. Now, look, higher interest rates for longer is not good for anybody. But if you don't do it correctly, it can really cause a vacuum in the market and can mess things up. That's why I'm a fan of Jay Powell. People are not. I believe if he navigated us through COVID, those S&P is up 100% since COVID. If he had not done what he did, we'd all be on friggin' breadlines now. And I'm a firm believer in that. And I've studied this stuff for 40 years. Okay. So what I think is going to happen in the future is a lot of unknowns, right? My gut is they're going to have to cut one more time in December. It's just the way it looks. The economy is softening. CPI, PPI, we are starting to see the impact of tariffs on the economy, on the consumer, on consumer confidence. That is, I don't know why he played that game yesterday. Economic data that we don't see, or maybe he's just kind of posturing and poking the bear a little bit with Trump, right? By saying that we're not going to cut them in December because that's the fight going on. Trump wants him to cut the heck out of rates, and he does not want you. Look, the bottom line is everyone needs to understand that there's supposed to be, and no disrespect or political incorrectness, there's supposed to be a Chinese wall between the federal government and the Federal Reserve. They should not be even communicating with each other. They are an independent body, right? So Mr. Trump is actually not allowed to tell the Fed what to do unless he's announcing a new Fed chairman. But he's been heavily pressuring Powell to do everything he wanted to do, and he held his ground. So there are a lot of unknowns. My gut is we will get a cut, but it's really going to be as they say every time he goes on, it's an economic data-based decision. We'll see how much more the tariffs are going to impact our economy, the consumer, jobs market, and all that stuff, and pricing, right? And once we get that, we'll be able to know what's going to happen in December.
You think we're going to have an all right November? You think the market's going to be choppy? You think it's going to be temperamental? What do you think?
You know what? If you were to ask me, is the market going to be up or down in November? I would say to you, yes. Okay.
Yeah, you'd say both.
That's the best advice I can say. You know what? Look, we still have a super strong AI market. We still have earnings, which is the lifeblood of the market. Earnings and guidance have been more than 80%. More than 80% of the S&P has beat, right? We had a strong, the large banks had strong coming out of the gate on earnings. We saw a little softness in the regional banks, but there was no follow through on that. It looked for a minute like we were going to resurrect the Silicon Valley Bank SVB failures from last year, because we saw last week when they announced regional bank earnings, they looked soft. They said that a lot of people are having trouble paying their bills, paying their credit cards, paying their mortgages, but we did not see much follow through on that. So the bottom line is all this stuff is sometimes just chatter and noise. And what keeps the market strong is the fact that there's $6 trillion in the sidelines that needs to be bought before the end of the year. The earnings have been blowout solid. The AI phenomenon and revolution is still all things are a go. So my gut is this market goes to 50 thou on the Dow and 7 thou in the S&P, and we're off to the races. Now, is it going to be choppy on the way there? It's very possible. It will be. I always say we're one tweet away from crazy town. As we saw that. We saw it last week. We saw it yesterday, right? When Trump found out that the Chinese weren't buying soybeans from us, the market went down 30, 40, almost 60 handles. Now, we did see in the middle of the night, if anyone was watching, I don't really sleep much, so I was watching the initial meeting between the president of China and Trump last night in the middle of the night in Korea, and it was incredibly friendly. They were talking, President Xi of China's posturing with Mr. Trump was really extraordinary. We've never seen a conversation that was that tempered and that deliberate by the Chinese and by Trump. It couldn't have been more friendly. They have a plan to really solidify him. And I think this was the silver bullet that Mr. Trump's been holding in his gun for since February, March, and April, when there was that self-inflicted economic Armageddon that we had when the market sold off 20.8%. He knew in the back of his mind that once he got a hold of the president of China and we got sat down face to face, that they were going to make a deal that was going to blow the world out. Trump said yesterday, ladies and gentlemen, buy the stock market, because once I'm done making a deal with China, no one has ever seen a stock market with the strength it's going to be when I'm done checking off the box with China. If that happens, and chances are it may, because it should happen, right? They are our largest trading partner, yet they are our most contentious trading partner. And we've got two of the biggest egos, two of the most powerful people in the world, right? President Xi of China and Trump. And they've had a contentious relationship. But at the end of the day, he's a deal maker, right? And he wants to make America great again. It's not a political statement. It's just an economic statement and a fact. And so his whole thing, everything he's done over the last 8 months has been riding on this meeting that he's having middle of the night last night and today and tomorrow in Korea with the president of China. If this goes all well, this market is off to the moon.